All right, g'day internet, Max right here, and looking forward to a fun episode today. We'll be taking a few questions later on, but I really wanted to address the issue of the 4 year cycle. The question is it dead? Because it does make up a large part of the investing thesis that I've had for the last couple of cycles. And even on yesterday's episode, I talked about how we're using the 4 year cycle implicitly when I talked about what's going to happen over the next few months. And so I think it is worth revisiting, is the 4 year cycle still in play? Because there's certainly a fair amount of evidence to suggest otherwise. So maybe to kick off the show, how about we check out, let's check out Willy Woo here. So let me just figure out how to do this. We're going to here, and let's listen to Willy.
What are your on-chain analytics telling you?
Yeah, it's quite unprecedented right now. We're what is it? Getting on our 12th year into this network, and for all of this, we've seen this very cyclical behavior between bull and bear cycles every 4 years. The halvening has had a lot to do with it, where every 4 years the miners' reward gets halved, and therefore the amount that they sell onto the market is reduced by half, and that produces this sort of bullish impulse to market. So we're currently in this bull market coming off a halvening, and most people are expecting a bear market into 2022 because that's the cyclical nature, the 4 year cycle of Bitcoin compared to maybe a 10 year cycle for macro markets. But what's interesting right now is that we're seeing a peak kind of reaccumulation by long-term investors. Whenever you see this level of reaccumulation by long-term investors, it's usually the fuel to drive another bullish rally, of multiple months. And so as we come into the fourth quarter of this year, we expected a very strong rally and then a blow off top. That's the normal expectation on the cyclical nature. But right now it's like, wow, the data is showing that the structure is completely different from every other cycle. And if it's correct, then this bull market is not going to end end of this year. It's going to go well into next year. And potentially there's a lot of evidence now I'm seeing quantitatively with this data to show that 4 year structure is breaking down. So we were locked into this kind of 4 year cycle, and perhaps now we're breaking free of the gravitational pull of this halvening impulse, and the demand and supply from investors and all the parts of the ecosystem are more predominant. And so in that regard, we might just continue to run up with these typically 50% pullbacks, which isn't much of a pullback if you've been in Bitcoin long enough. We're used to 80% pullback over a year. And we just had one of these 50% pullbacks, and, a consolidation of just barely over 2 months, and then we're off to the races again. So I could totally see that being the more, the behavior of Bitcoin in the coming years, where we do this kind of random walk of price discovery as it finds its price at network saturation, where everyone's using this network. So that's the most interesting thing right now.
So let me just, very, very interesting stuff from Willy there. So he's just saying that on-chain analytics is suggesting something kind of different is happening. And there's two main reasons for it. Let's explore both of them. Reason number one is the block rewards are getting smaller. The block rewards are getting smaller. So that's what happens. Every 4 years, the block rewards get halved. So what that means is as a percentage of the Bitcoin supply, then it becomes less and less relevant. Now, I want to give a counter argument to that. There's another way to look at that. Because the price of Bitcoin goes up so significantly every 4 years, the dollar amount that is absorbed, the amount of money coming into the Bitcoin space, the dollar amount that is absorbed by the Bitcoin rewards is actually higher. So that's another thing to consider. So if you look at it as a percentage of Bitcoin, the block rewards are getting less. But if you look at it in nominal dollar values, actually it's getting higher. So there's a counter argument to consider. But nonetheless, the block rewards are getting smaller, therefore as a percentage of the Bitcoin supply, the rewards are getting smaller. Something else is happening. When Bitcoin was in its more infant days, people would be, the miners would be relatively small operations, and they would be buying, so they'd buy electricity. Well, sorry, first of all, they'd earn the Bitcoin, then they'd have to sell that Bitcoin to buy electricity. And in order to cash flow that operation, they liquidated the vast majority of their Bitcoin, like on a regular basis. Something's very different happened in the mining space the last few years. These are publicly listed companies now that are Bitcoin miners, huge operations. They go out into the market and they raise crazy amounts of money, and then they don't have to sell the Bitcoin onto the market. So whereas I don't know actual numbers on this, but let's say 4 or 5 years ago, what happened is the miners would mine the Bitcoin, and I would say somewhere in the order of 70 to 80% of that was liquidated immediately to pay for the electricity costs. I believe that number has come down significantly. I'd say it's somewhere in the order of 30 to 50% right now. And in order to pay for their electricity costs, that money is just being sourced from the market through IPOs, through bonds, and through other things, and then the companies are holding the Bitcoin a lot longer. So that is another, between those two reasons, the halving, which was triggered by the 4-year cycle, which was triggered by the halvening, should be reducing. That is something that we would expect. So let's jump to the charts here and let's see what we actually see. So I think the period that culminated with the 2017 blow off top here is the most obvious example, and it's beautiful, it's pretty. So let's see what I'm talking about here. It's just really easy to see. There was, from the previous blow off top, there was this cycle of a beautiful, beautiful cup. In fact, if you know your cup and handles, there was a little handle, and then we're off to the races with a blow off top before we have another crash. By the way, I want to point out we're looking at the logarithmic chart here of Bitcoin from 2014 through to present. And so that whole process there, that took 4 years to play out, more or less, peak to peak. Okay, and it occurred because of the halvening. Now, the halvening actually happened, I believe, in May of 2016. There was a halvening, yes, and then we just had one not too long ago that was May of June. That one was in May, June, July. June, I believe it was July back here. But nonetheless, the halvening is actually is the trip, is what caused this whole cycle. Now, I want to point out something here. What happened in this area? So I'd argue we've already seen a change. We've seen it play out significantly. And what I think you'll find here is we've actually now got a 2-year cycle. Now, whether or not that will last into the next time, that remains to be seen. But I want to point out, I've pointed this out a number of times on this channel before. In this 2-year cycle, in this 4-year cycle, instead of this cup, we had an interruption to the cup and we had a lump. And then the lump came back down and joined where the cup should have continued from. And then the cup continued. And then, whereas we should have just gone off, way up. So this interruption occurred in the middle of the cup. And then this just beautiful price rise, off into the distance as we break out of the cup, got interrupted. Same thing. So here was the peak of the cup. We broke out of the cup here. We should have just gone on here for another 12 months of bliss. What we had was another interruption, right? And so this interruption played out. Let's give me a little bit more room. Nope. Okay, so what we were sort of seeing was this gone up, but what we had was an interruption. We came back down with a 50% pullback, and I think we'll see this up. So you can see, compared to the previous cycle, pretty cup and handle off. They were the only that was the major pattern. I think we're repeating the exact same thing. Cup, handle, up with 2 interruptions. Right in the middle of the cycle, there was an interruption right here. And right in the middle of this cycle, there was an interruption here. Arguably, we've already gone to a 2-year cycle. Now, what Willy Woo was predicting is that rather than these big 4-year cycles, we're going to get shrinking cycles of less magnitude. Meaning, rather than this period down here was, basically a 2-year bear market, right? And the price went down like in the order of 80%. This was a 2-year bull market, right? And the price went up, whatever it went up, from 200 to 20,000. That's 100x, right? During that period. So what he's suggesting is that the cycle, that we're going to get smaller and smaller, and they're going to be lesser and lesser magnitude. Well, let's see how that played out. Let's just do the math here on this one. This one went from, I think it got up to 14,000 from memory and crashed back down to 3,000. What's 3 on 14? That's like a fifth. So that was pretty much an 80% pullback, 80% pullback here. Yeah, that would be an 80% pullback right there. This one was only about a 50% pullback. But we did get a shortening of the cycles. And what Willy Woo was predicting that in the future, we're going to get more and more pullbacks. We're up, we're down, we're up, we're down. That period is going to get smaller and smaller. So no longer should we expect 2-year bear markets, 2-year bull markets. But what I do think is happening, and so then the question becomes, because this will change how we play it. Even if it gets smaller, see, this one got smaller, but it still had, I would argue, a blow off top, right? This went up very, very quickly, blow off top, and came down. And I won't do it now, but if you go back and look at it, I think you'll find that with the Ethereum price, actually, I don't want to misspeak. Let's double check this. I'm right here. Let's call this peak somewhere between the 1st and 8th of July. I want to have a look at the Ethereum peak. Was it delayed? It was not delayed. The Ethereum peak was on exactly the same time. So Ethereum crashed together. There was no time delay. So we're on this peak, and on this peak, there was a time delay of around about 2 to 4 weeks, Ethereum price crashing after the Bitcoin price. On this peak, Ethereum price crashed the same time as Bitcoin price. Something interesting to take note of. Let's get back to the Bitcoin chart. And so now the question becomes very, very interesting. In the future here, are you expecting the price to have more peaks and valleys? Not a gigantic 2-year bull market, but more peaks and valleys. And the answer is, I do believe the answer is yes to that. However, there's a competing thought we must consider. We are hitting the tipping point. We are crossing the chasm of the Bitcoin adoption cycle right now. Adoption in the US is what? Adoption in the US is hit around 15 to 16%, right? There's about 15 to 16% of American citizens hold Bitcoin or are invested in it or exposed to the price in it in some way. They self-identify as Bitcoiners, I think was the term used. So now, question becomes, the tipping point of the adoption cycle usually happens around 13 to 15%. Right from here on in, for the next several years, we expect an absolute explosion of people to come onto the market. So that would mean the price to absolutely skyrocket. Right now, we're at around 150, 200 million Bitcoiners. That's expected to hit 1 billion by 2023, 2024, and 3 billion by 2027, 2028. So you have this period where just an enormous amount of people is going to come on. To me, that says prices are going to explode. When prices are going to explode, that says FOMO. So first, price explodes. Then FOMO hits in, and price goes absolutely ballistic. And then there's this big correction from the blow off top. So with that massive amount of people coming in, personally, I would expect blow off tops. But we see here both this peak and this bottom, they were not blow off bottoms, they were not blow off tops. Like this was a blow off bottom, blow off top. Blow off bottom is not a correct word. I'm not sure what you call that, but a very sharp in and out. This was not. We spent a couple of months down here. We spent a couple of months up here. And so these were very rounded edges. These were very sharp edges. Interesting to note. Moving forward, what are we going to expect? I expect a very, very, very good trend for the next decade in Bitcoin, but with pullbacks. Probably pullbacks in the order of 50 to 60% regularly along this walk up. Okay, so I agree with Willy. I think these things are going to get shorter. I'm less confident of blow off tops, sharp tops, sharp bottoms. I think we might see some of these rounded tops and rounded bottoms on this walk up. All right, we'll get to questions in just a minute, but let me know in the comments below, what are you thinking is going to happen in the future? Is the 4-year cycle going to continue? Are we going to have shorter cycles? Are they going to have as deep an impressions? Let me know in the comments. What do you think is going to happen and how are you going to play it? All right, I'm going to jump to some questions here really quickly. Actually, I'm going to get these questions from the Discord group. So shout out to the Success Squad guys. From Guido, we said, hey, watching your last vid, congratulations on your second child. Thank you so much. In the last video, I announced I'm going to be a dad again for the second time. It's early days, first trimester, still got a little bit of ways to wait. And then this question from Crowstick. Hey, Max, how do you hodl alts long-term? How do you hodl alts? Do you hodl alts long-term as well as your hodl BTC bag? Or should alts be bought and sold for profits in regard to the BTC dominance? In other words, would you agree that alts are more risky to hold long-term than BTC? The answer is yes, alts are more risky to hold long-term than BTC, but this question perfectly kind of ties in to our previous question. See, if we had a 4-year cycle, it would be really easy. You would, during that 2-year bear market that you would expect to get, you would not want to hold alts. Typically, alts going to get hit significantly harder than Bitcoin during that. Bitcoin went down 80% in that downward period. Alts went down 97% during that period. It was a brutal, brutal time for alts. So very, very important to consider that. So if the cycle changes, it kind of changes the question and the nature of this question and the answer to it. But basically, in short, when uptrends, you expect alts to outperform Bitcoin. In downtrends, you expect altcoins to lose more than Bitcoin. So there's a couple parts of this question. A part of it is portfolio management. Because we can always think we know, but we never know. We never really know what's going to happen, okay? We will have opinions, and we may adjust our bags accordingly, and I think that's a better way of using it. So when I believe we're going into a down market, I might sell 50% of my alts and only 20% of my Bitcoin, right? And then as the market, when my opinion changes and I think we're going bullish, I might buy, with money that I'm bringing back into the market, I might buy 80% alts and only 20% Bitcoin. So that's how I kind of think it. It's not as black and white, but if I think there's going to be an uptrend, I want my exposure to altcoins to be a little bit bigger. If I think there's going to be a downtrend, I want my exposures to altcoins to be a smaller portion of my bags. Hope that helps. Further question, or another way, are you selling your alts to put into BTC now, or are you also long-term holding some alts? So again, portfolio management. I'm never 100% in Bitcoin or 100% in alts. But so during this time, I've shifted a little bit more. Like when I bring dollars in right now, I'm only buying alts. And I do have a ridiculously large Bitcoin position. It's way out of whack. Like my portfolio is 90% Bitcoin. So in order for a little bit of diversification there, I'm not buying Bitcoin right this minute. I'm buying alts as well. If you watch yesterday's program, you'll know as the price, I'm expecting Bitcoin dominance to kind of surge here at some point over the next few months. As that comes, I'll actually be selling a little bit of Bitcoin, putting it into alts, right? I'll just start peeling away bits of Bitcoin, putting it into alts. But then when I think we're near a cycle top, I won't sell any more of my Bitcoin. I'll actually only be selling alts and coming back into a cash position when I believe it's time to dial it back. So hope that helps. Let me jump over to YouTube, see if there's any questions here on YouTube. Let's see. Any questions from Organics? The halving events will still... so Phil believes that the halving events will still dictate a 4-year cycle to a certain extent. Yeah, and I believe that's a really good way of looking at it, Phil. To a certain extent there is the magic words. So I believe because there's so many people, like this is a pretty advanced channel, we're starting to ask these important questions, like is the 4-year cycle finishing? Not many channels are asking that questions, let alone all the number of people who are Bitcoiners who don't watch any YouTube channels. They just bought Bitcoin because they were told to, and they were told, they haven't got any new information than a year ago. Their buddy at Thanksgiving or family member at Thanksgiving who told them to buy Bitcoin and taught them all about the 4-year cycle, and they just haven't got any more information, so they believe there's a 4-year cycle. So there's going to be a large percentage of the population who believe in the 4-year cycle for another 20 years, even if the 4-year cycle doesn't still exist in 2 years. So I view it as just like the sum of waves. So there's like a certain amount of people are going to believe in a 4-year cycle. There's a certain amount of people are going to believe in a 2-year cycle. And the number of people in those two camps, and there's probably 3, 4, 5, 6, 7 different camps with different philosophies, the number of people in those various camps ebb and flow over time. And they change the magnitude and the weighting of each of these different waves, depending on how many people, and more accurately, how much capital. One person with $1 billion who changes their belief is significantly more valuable than a million people with $10 who change their beliefs. So as the people who hold the capital change their opinion on the cycles, that is what's going to dictate what happens in the markets over the future. So great questions, everybody. Thank you so much for the stream today. Do me a favor, go ahead, hit the like button, hit the subscribe button. Every single day, I'm trying to do it, but I'm not going to do it tomorrow because just FYI. But Monday through Friday, usually every single day at this time, what was it? It was noon Eastern. I'm going to be doing a show here and take a few questions from the audience. But tomorrow I won't be available, so we'll kick it up again on Monday. I'll see you on Monday. Take care, and I'll see you soon.